From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB on this Monday, the 29th of July. An absolute pleasure to be here with you. I've got a guest host coming with me. Josh Gilbert will be joining me from eToro shortly. Look, we opened, we pushed higher, and the market pretty much did not deviate from that throughout the session. The chart sort of speaks 1,000 words. Yep, lifted at the open, up by around 0.75 to 0.9%, pretty much the entire session. So, hey, for a Monday, we will take it, building on Friday's gains, of course. And when we think about where we're headed this week, boy, weight of expectation. Not only are we hoping, I suppose, to see those tech results come in strong in the United States, but we also have an inflation read here locally that will go a very long way to determining what the RBA will do when it meets next Tuesday. I had a great chat with Phil O'Donohoe from Deutsche Bank. It's just been published to the website. If you missed it, you might want to take a listen. He is not ruling out an interest rate hike. If this inflation number comes in just a bit hot, he says that the central bank will have no choice but to lift rates. But it was really interesting because what he is saying essentially is that the RBA in hiking rates will just be taking fiscal stimulus out of our hands for a short time. He said the tax man is giving it in those stage 3 tax cuts, but the central bank will temporarily have to take that away to keep inflation under control. You can listen to his thesis. It's up online, as I just mentioned. But yeah, it's a big one coming on Thursday. I mentioned big tech earnings in the United States, but we also get earnings coming out here. So Rio Tinto on Wednesday is probably the biggest cab off the ranks this week. Pinnacle Investment Management Thursday after the close. So a few little dribs and drabs coming in. And I'll be speaking with Mick Farrell, the MD of ResMed, Friday morning. Of course, they release their quarterlies in the US, so it happens in the US first, and we speak with them Friday morning. So I'm really looking forward to that chat as well. We are where you want to get your reporting season news. We'll get you plenty of analysis in the lead up. ST Wong today comes to mind from Prime Value Asset Management. Also, Junbei Liu from Tribeca Investment Management. Had a good chat with her today. So that is up online as well. And I'll put it on my LinkedIn or perhaps on Twitter for those of you who are real big fans. I know a lot of people want us to let you know when we are speaking with Junbei Liu from Tribeca. All right, tech, here we go. Running you through some of these sectors. WiseTech Global up by 2%, Xero 1.2%. Interesting though, I've had a few conversations just about whether or not some of these companies, like the likes of NextDC, are just looking very fully valued, considering. Woodside, doing a little bit of a deep dive for something else into Woodside Energy, seeing it make some gains today as the oil price has lifted. Really interesting to read various analysis on this acquisition in the United States and that Driftwood project. Yeah, Citi, for one, is pretty negative on the whole sort of equation overall, whereas Macquarie is very positive on what this will mean for the company going forward. So yeah, just keep your eye out for further analysis of this, and also when we see this deal done in the United States, when we get a bit more detail on what Woodside plans for that Driftwood project. Miners, here we go. BHP, Rio Tinto, Fortescue. Junbei Liu was saying that resources are likely to be a sour spot in these earnings that really do kick off this week with Rio Tinto. So keeping our eye on that. South 32 has closed a deal in selling off its Illawarra metallurgical coal assets, up by 1.5% today. All right, let's get across some of the top corporate stories. And we've got tech. Well, up on expectations for that Fed interest rate cut. Fletcher Building is the worst performer on the 200 after saying it expects a $26.9 million hit to its financial year earnings because of operational issues. Has to do with cement, New Zealand, from what I read. Kogan coming under pressure, 1.5% decline in gross sales for the June quarter. Pacific Smiles has received a revised proposal from Genesis Capital to acquire all shares via a scheme of arrangement for $1.09 per share. I thought it was also really interesting to read about Boss Energy, which has decided to not proceed with buying the assets from ERA, and so its shares are down by about 5%. John's Ling Group as well. It is coming under a bit of pressure after a broker move from Bell Potter lifting its price target, but still, seeing some pressure coming through for John Ling's group ahead of earnings season. All right, let's bring in my guest host. I think he's ready. Josh Gilbert is joining us from eToro. Hey, Josh, thanks for joining us. How was the day today?
Yeah, hey Nadine. Yeah, good to be here. I think the Monday was okay, other than it being absolutely freezing. But the market didn't get that memo. It was all green today. Every sector, positive from the last time I looked. Broadly positive. A lot of it coming from, as you say, that this expectation now that we are going to get that first Fed cut in September. Just looking at price in the markets, basically calling for 100% probability that we are going to get the cut, and that's pretty significant given that the Fed has basically done everything that the market expects when it comes to pricing for the last 14 years. So really looks nailed on now that we're going to get that. A great start to the week, obviously coming in from the US and sort of starting the week on the front foot ahead of what is a pretty packed week from the macro and from the corporate front as well.
Yeah, it's interesting that we saw Goodman Group up by a solid 2%, Vicinity Centers, so those REITs, those interest rate sensitive stocks looking good. Again, in my chat with Junbei Liu from Tribeca Investment Partners, she was saying, maybe have run ahead of themselves a little bit. And then resources, still a pain point. Even today, we saw BHP, Rio, and Fortescue trending lower.
Yeah, I think what we are starting to see more broadly is we spoke about it over the last couple of weeks, but we are starting to see this sort of bull market broaden, which I think is really positive away from just some of those real winners, mainly tech, let's be honest. Although if we do look at the S&P 500 earnings so far, tech is what's leading. It's leading earnings growth so far. So that's the reason why we have seen that outperformance from tech. But we are beginning to sort of see this bull market broaden on the basis that we are going to have, more winners on earnings growth down the track, and that, those technology gains are going to sort of begin to slow from, a REIT sector. Absolutely. Again, market forward looking, although we are still sort of tossing up that idea that we might get another hike here, depending on that inflation data that we get this week. Again, a big focus is always going to be on what the Fed do, given their sort of dominance in the world. And then, resources, really that China sort of cut at the back end of last week, still probably not really creating a lot of investor excitement, I would say. Still think we're sort of maybe lacking on the sort of consumer front a little bit. Again, I think I think we had two cuts sort of last week, really. But again, not sure it's probably going to be what's needed to really drive demand in the short term. I think, obviously they're looking to sort of drum up loan demand. Whether it does that, not sure. But look, ultimately, it is a step in the right direction where they are sort of starting to, ease that monetary policy, and they didn't wait for the Fed, which is, I think, in my eyes, a bit of a positive. And I think, again, probably because we've seen a bit of a weakening in the dollar, which obviously gives the Chinese yuan a bit of protection in the short term.
Yeah. So, a lot of expectations around interest rates. Got to say, the crypto bros will be cheering Trump. We saw a lot of focus on Bitcoin today. What are you seeing on the platform?
Yeah, look, I think obviously, huge weekend in terms of crypto, and obviously we had the Ethereum ETFs go live last week as well. So I think very broadly positive from what we're seeing in terms of crypto land at the moment. And as you mentioned, those rate cuts sort of coming as well. I think limited action to the upside from crypto, really when we think about Trump's comments and the sort of the positivity that we got, ultimately, he bottom line endorsed crypto, flat out said that it's going to be something that is part of his campaign. He's basically going to sort of get rid of SEC Gary Gensler on the day of his presidency. He won't be backing a US CBDC and will support innovation. So very broadly positive. But I think we've not seen that huge reaction because of two things. One, because ultimately we already knew that Trump was pretty bullish on crypto before that anyway. His odds of obviously getting into the White House have obviously been increased since Biden stepped out. But we also had a pretty strong week weekend for Kamala Harris as well in terms of fundraising. She sort of picked up a little bit and closed the gap with still about 100 days left, I think, in terms of that election. So still a long way to go if we think about election campaigns. So there's still a lot on the table. But the closer that we get to a Trump win and the closer that we get to sort of seeing him, move into the White House, I think, crypto is certainly going to begin to sort of price that in, and we certainly will begin to see Bitcoin moving the closer that we do get, in my eyes, to a Trump presidency.
Okay. Can you detail what you are expecting from these big tech earnings this week, Josh?
Yeah, absolutely. Look, it's going to be a mixed week, I think, really, because we're coming off the back of what was, mixed results last week. Tesla was obviously the notable name, really. Missed earnings, disappointing commentary, pointing towards sort of lower vehicle sales in sort of 2024. And it would ultimately be the first time we ever see a decline in sales growth ever in their history. So that's, a bit of a disappointment if we end up getting there. Alphabet, on the other hand, pretty positive, but I think there's a question mark coming in over their spending on AI. Although they could prove to be prudent, Wall Street is questioning when that monetization is going to be coming in. And I think that will be front and center this week. We've got Microsoft, who is arguably one of the biggest spenders in AI at the moment. Their spending has, I think, been very well placed so far, and Wall Street has ultimately applauded any spending on AI for the time being. They have come to the table with those numbers. Net income has continued to increase. They've delivered numbers, but again, that capital expenditure number is increasing across all these big tech names, and I think they want, Wall Street wants to see monetization. The difference here is, I think, maybe we get a little bit scared. We look back to sort of the Meta era, when we had Mark Zuckerberg spending heavily on the metaverse. Obviously that wasn't well placed at all, and obviously shares got hit very, very hard around that period. But I think this is slightly different. I think Wall Street is applauding spending for the time being, but again, there is going to be a patience limit on this here, and monetization needs to be sort of front and center. Apple, again, I think will be a name for me that's going to be in the limelight, given that they were pretty slow on the AI front. News today saying that sort of new AI integration won't actually come in until after the new iPhone is launched. And that was kind of really the selling point for this new iPhone. So that will be a bit of a disappointment, I think. And of course, with China still not coming to sort of play ball, any guidance into sort of the second half of the year is going to be really important for Apple. But they have turned things around a little bit in the short term. But again, probably a little bit more negative news in the last week for them than they would have liked.
Yeah. How about China when it comes to Apple? That's still a concern, isn't it?
It is, yeah, absolutely. And again, we spoke earlier about those sort of rate cuts, but again, it's not really focused towards sort of consumer demand. We're not really seeing anything on the front for consumers. It's very driven by, loan demand. It's very driven by sort of, monetary easing. But are we going to get to the point where we can see actual sort of support? Are we going to get that stimulus support for consumers? Not 100% sure. Apple has lost a lot of ground in the terms of the smartphone market. Huawei is sort of one of the names that's really dominating, but they have, fallen down the ranks, there quite heavily. And it is a key market. So there was a slight pickup last quarter, a slight improvement on sales. It was better than expected. So again, we'll probably be looking for something similar there. We expect it to be weak. If it can beat expectations, I think that's going to be the real key. But guidance will be really key, I think, for China. Tim Cook spoke a little bit about China on the call last quarter, but I think he'll be pressed on that a little bit more this time around.
Yeah, because we know what the Chinese consumer is going through. Okay, Josh, just a final word on the S&P ASX 200. So yeah, positive session to start the week. We'll take it. But there are big risk events down the line, isn't there?
Absolutely. Yeah. Great start to the week. But as you say, huge risk events sort of coming in. Two big macro numbers, really. Obviously, that CPI number is arguably, in my eyes, probably the most important data point that I think Australia has received this year. We've also got retail sales data coming in on the same day as well. So Wednesday is going to be a pretty busy day for all of us. But again, that CPI number is going to be the one that is basically make or break moment for the RBA. Do they hike or do they not? Again, if we do come in above expectations, as many economists on the show have said, then I think the RBA's hand will probably be forced into doing that. Although ultimately, I think the bottom line here is, they are going to be very reluctant to hike the RBA, because I think it would, if they do hike it, they may have to concede that they may have made a policy mistake at some point. They should have hiked rates maybe further earlier on, but that's obviously going to have to be waited to be seen. But I think for investors, inflation still sort of remains the biggest worry. So, any increase there will certainly put the market on the back foot. And I think that a better sign will obviously increase the expectations of rate cuts locally, which will be once again very good for those rate sensitive sectors. So we are in a completely different situation to the rest of the world, where we sort of seeing cuts from Europe and obviously, hopefully the US in September. We are on that back foot, probably not going to be seeing a cut until, at this rate, until Q2 2025. But I'm not sure we will get a hike. I'm going to be positive, and I'm going to think that this inflation number is going to come in either with expectations or below expectations. And I don't think we'll get another hike. And I think the focus will then shift to when we might first get that cut from the RBA.
Well, I like your optimism. Josh Gilbert, eToro, as always, thanks for joining us.
Thanks, Nadine. Have a great week.
Take care. All right, so we went through some of the big corporate news, but we also heard from Regional Express Holdings, Rex, the airline. Nathan Somasundaram from Deep Data Analytics and Kai Chen from MPC Markets gave us their buy, hold, or sell call.
Hasn't got a really good track record of, when these kind of airlines go under, they go down very fast, and I don't want to find out how it goes down. So I'm not picking Rex. I think issues will come through. Qantas, I think the cycle will weigh on them. If I had to look at one, I would look at Alliance, but I'm not buying that right now, but that's on my watch list.
I think in terms of Rex itself, the management, how this came about was basically, you've got Lim Kim Hai and his brother-in-law who owned about 50% of the company. And there's just been a string of poor governance from them. They failed to disclose their profitability and basically it was slow in reporting their losses, as well as failing to disclose the relationship between him and his brother-in-law, which was I think the start of the whole drama.
Yeah.
So there you go. That is the verdict from both of our guests, pretty much saying, don't get involved. All right, let's take a look at some of these market leaders. I dare say Rex will not be on this list. Star, I don't know what happened toward the end of this session, but we've seen some buying and significant buying coming into Star Entertainment. And I say I don't know because I don't see any news. There's nothing on the ASX. So we'll be keeping our eye on that one. New Farm as well is up by 5.5%, finished the session. Pretty positive there, no news. Now I do know that Viva Energy was out with its production update. So talking about refining margins, gross margins for convenience, commercial industrial volumes coming through commercially up by 8.7%. So the market's liking the update coming from Viva Energy, of course, ahead of its full year results next month. Zip is up by 3.5%. Again, no news. Fletcher Building, we talked about a bit of a warning about an impairment coming through there. Boss Energy withdrawing offer for ERA's Jabluka uranium site. Probably murdered that name, but anyways, Audinate is off by 4.7%. And John Ling's group. I don't know why Audinate is off either to that extent. All right, let's look in the small cap space to see what's moving there. Credit Clear, I spoke with the CEO. That interview is up on the website. Really interesting conversation about AI experimentation. So actually using AI in the business. Speaking of, up by 16%. Biome Australia was out with an update today, up by close to 12%, as was Bone Coal, up by 10%. On the flip side, though, no idea what that one is at the top of the screen. Findy getting hit hard, off by close to 11%. Really sort of, different views come from different people on Findy. Some really see the potential, but today on No News, down by close to 11%. What are we expecting overnight? Well, it's sort of the calm before the storm, I guess you could say, in some way, shape, or form. We are expecting to get the US, the Dallas Fed Manufacturing Activity Index. So it's a mouthful, but just giving us a bit of an insight into what's happening for that central or so the state bank. Let's go to tomorrow here locally, building approvals. We get Enserada out. Credit Corp, nope, checked into that wrong. IGO and Perseus Mining quarterly reports, and apparently a Technology One investor briefing, so that'll be interesting. And we get the unemployment rate coming from Japan. All right, let me just quickly recap where we saw this market finish and positivity for the S&P ASX 200. So looking good there. A broad rally. We saw, other companies that we spoke with. I spoke with the incoming CEO of Adore Beauty. Adore Beauty ended higher today. Just getting news that Austal has been awarded a contract for a wind-powered Trimarian. So a bit of late breaking news coming from Austal. And of course, we're going to be keeping our eye on what happens when it comes to US earnings, as per usual. So that's Monday in a nutshell. Really pleased you could join us today. We hope you can join us tomorrow on ausbiz.com.au and take the time tonight to catch up with any of those interviews I mentioned that we did throughout the day. Bunch of small cap CEOs, micro cap CEOs, as well as those reporting season insights coming early from the likes of Junbei Liu and ST Wong from Prime Value Asset Management. Hope you have a good night. We'll see you tomorrow.